In this video, we review Merrill Edge versus Merrill Lynch. Have you used Merrill Edge or Merrill Lynch before? What was your experience? Leave your Merrill Edge or Merrill Lynch review in the comments section below. When comparing Merrill Edge and Merrill Lynch, the distinctions lie largely in their target audiences, services, and investment approaches. Merrill Edge is structured as a self-directed brokerage and appeals to more cost-conscious, hands-on investors. It offers commission-free trading on stocks, ETFs, and options, making it an affordable choice for DIY investors looking to manage their portfolios. Edge also includes a robo-advisory service, Merrill Guided Investing, for those seeking automated portfolio management without the need for a dedicated advisor. The platform provides basic but efficient tools, research, and market data sourced through its parent company, Bank of America, giving clients extensive insight into market trends and analysis. However, Edge's services are limited when it comes to high-touch, personalized advice. It lacks support for advanced asset classes such as cryptocurrency and fractional shares, which may limit its appeal for more sophisticated investors. Merrill Lynch, on the other hand, caters to high-net-worth individuals seeking tailored financial planning and full-service wealth management. Through its wealth management branch, Merrill Lynch assigns a dedicated financial advisor to each client, offering in-depth guidance on complex financial strategies, from estate planning to retirement and tax-efficient investing. Advisors at Merrill Lynch provide access to a broader range of investment options, including alternative assets like private equity and hedge funds, which are typically reserved for more affluent clients. This level of customization comes at a higher cost, often with management fees that start around 1% of assets under management, AUM, for actively managed portfolios. Merrill Lynch's approach is more hands-on, focusing on long-term strategy and wealth preservation, though its fees and minimum investment requirements are significant. Both platforms are tied closely to Bank of America, giving clients access to integration features across banking and investment accounts. Edge users, for example, can benefit from the Preferred Rewards program, which offers fee discounts and other benefits based on combined balances across Bank of America accounts. Merrill Lynch clients can also leverage Bank of America's banking services but enjoy additional perks, like invitations to exclusive financial seminars and premium market insights. In terms of user experience, Merrill Edge stands out for its user-friendly interface and the seamless integration of its mobile app with Bank of America's digital offerings. Its Market Pro tool delivers a robust trading experience for active investors, offering real-time quotes, news feeds, and customizable dashboard options. However, Edge's lack of sophisticated trading tools, such as backtesting or automated trading capabilities, may be a drawback for more advanced traders. Merrill Lynch, conversely, offers a more premium client experience with direct access to expert insights, financial education, and personalized financial strategies, which cater well to investors who prefer a comprehensive, advisor-led approach. Ultimately, Merrill Edge is ideal for cost-conscious, self-directed investors looking for accessible, low-cost trading and basic portfolio management. In contrast, Merrill Lynch is suited for affluent clients requiring personalized wealth management with access to exclusive investment products and in-depth financial planning. The choice between the two boils down to investment goals, experience, and the desired level of involvement in portfolio management. For those seeking autonomy and minimal fees, Merrill Edge is appealing, while Merrill Lynch remains a strong choice for those prioritizing advisory support and access to specialized investment options.